Welcome to Ways to Love Your Money. I'm Elizabeth Dawson, and we are in season 5. It's been an amazing season so far. We have a gentleman who's a CPA by the name of Chris Hervochon who's going to be on the show today, and he works with marketing agencies as well as creative agencies. And he specializes in a certain way to create higher rates of return. Well, I want you to stay tuned. We'll be right back for the show, and I don't think this is one you're going to want to miss.
Are you ready to upgrade your relationship with money? We created a free cheat sheet to help you discover the 7 hidden costs sabotaging your financial success and what you can do about it. Click the link below to get your free copy.
Welcome back to Ways to Love Your Money. We've got Chris Hervochon here, and he is a CPA that works with marketing and creative agencies, and I can't wait to hear what that's all about. It's business owners more than likely. So Chris, thank you so much for being on the show. It's a pleasure to have you here.
Thanks so much for having me on. Looking forward to it.
So tell me about these marketing and creative agencies. What is it that's your sweet spot that you work with clients?
Yeah, so our sweet spot is marketing creative agencies, somewhere between 3 and 10 people. Generally, they're going to run $750,000 to $5 million in revenue. And we really run the gamut as far as in that space. So marketing consultants, advertising agencies, design agencies, web agencies, those types of businesses.
So what made you design your practice around that?
It's one of those things that really just kind of fell out of the sky. My second client was a creative client. That's going back about 10 years. And then I had the business that I have now is, started as a side hustle. So when I went full time, my second client was a marketing agency. My third client was a PR agency. And when I went full time, I knew that I needed to develop a niche, and that was just a natural fit, right? So they're service-based businesses. There's no inventory. They lend themselves to automation, which is something that we're heavy into. Mm-hmm. And generally, they're just fun people to work with. So it worked out.
Well, so where do you become the expert in their world? You're a CPA. You're driven by data. So how do you basically get their profit and loss report or their rate of investment return to make it actually even sing brighter?
So one of the things that we do is we meet with our clients on a very regular basis, and we do the bookkeeping. We will deliver the reports, all the the accounting reports, balance sheet, P&L, cash flow statement, and we'll actually talk through those. Okay. So a lot of the times, what happens is the accountant or the bookkeeper will do all the bookkeeping, they'll prepare all the data, and then it's just kind of one of those here you go things, figure it out. Yeah, we actually sit down, we meet, we tell the story about what's going on. And we track whatever data sources that we have in the agency that make sense in order to make the financial data make sense with the operational data, and ultimately drive deeper insights.
Well, I think it's important for business owners to know that they need to have someone that really specializes in the work that they do. And I think that that's probably something that you bring to the table.
For sure. The two things that we hear all the time are my CPA doesn't get back to me, or I don't know what he does, and they don't understand how agencies operate. So those are really the two boxes that we're trying to check off by working with agencies.
So what are some of the core principles of accounting practices that you work with your clients? What are some of those things that would be takeaways for your client or someone listening to this podcast around the country? What would be their takeaways of how you would want to run your business more profitable and get it ready to sell?
Well, the first thing is to realize that financial data isn't scary. So we try to break down that barrier first. It's not scary. It's okay for us to sit down and talk about it. Your head's not going to explode. Nothing's going to catch fire, I promise. So that's the first piece. The second piece is cash flow. Mm-hmm. Understanding cash flow. The third piece is strategy. The two things that we see our successful clients do really, really well is they have a clearly defined strategy that they stick to, that they revisit on an ongoing basis, and then manage and measure cash flow. Okay. Without a doubt, that's the first two things that they do.
Well, I think it's important too, because so many business owners or people in general don't have a good knowledge of how tax returns work. So it sounds like you spend quite a bit of time with your business owners to have them have a better understanding of how all the reports and tax returns work.
Correct. So the first piece of tax advice that I always give, and it's the best piece of tax advice that I can give anybody, is to read your tax return. And it's simple, but that's the best thing. If you can actually sit down and read the tax return and understand where the dollars are coming from, where they're going to, why things are where they are, That's the best place to start because it starts with questions. Everything that we do revolves around questions.
Sure.
Accounting is all about questions, answering financial questions to move a business forward. Tax returns are about questions too. How do we have an open dialogue about how your tax return actually works? Strategy is all about questions. The basis of everything is questions. So if we can break down those barriers to this isn't scary. So when I send you your tax return, you don't just need to sign off on it. So I file it and just have it be done with, and you just want to know, am I getting money back or not?
Sure.
If we can go another level to, oh, well, I see that X, Y, and Z happened last year, and what is this? Why is that? Then we can have a deeper conversation, but it all starts with questions.
So do you help them with the questions to ask? Because I think the majority of people are kind of overwhelmed when it comes to their tax returns. Business owners are, they're working hard for their money and they're usually redeploying it back into the business, but taking some income for themselves as well. But do you help them with those questions that they should be asking?
Yeah, we try to guide them along that path. When we deliver a tax return, the first thing we always say is, here is the result. So do you owe money? Do you need, are you getting a refund?
Sure.
Where is it? Where is it going? How do you pay it? Those sorts of things. What's your marginal tax rate? What's your effective tax rate? Then we can start to play around with, the difference between the two and, how we can bring down your effective tax rate, because that's really the one that matters. What changed from last year? That's always a great place to look. For
Sure.
our business owners that have S corps and partnerships, what is your basis? What's your current basis? What was your basis last year? What changed? What does this mean? What does it mean from a distribution perspective? If there's any questions that clients ask proactively, we answer those. And then things you should be aware of, and that's anything as simple as we couldn't deduct X, Y, and Z, and here's why, all the way up to, direct deposits coming in 2 days or 3 days or whatever, as soon as we file, that sort of stuff. So that's really where we take it. And then, I always provide next steps.
Well, it's kind of interesting. You brought something up that I think is important to bring up, because most business owners have no idea about what their cost basis is of their business. And that has a huge role in the sale of the business. Do you want to talk a little bit about how a business owner or a partnership, how they would actually identify what their cost basis or their value of their business is?
So the value of the business and then the basis in the business are going to be different things. The value is going to be the value. So what you can sell it for is going to be derived from a couple of different factors. Number one, how profitable is it?
Yeah.
Number two, how risky is it? And then what is the growth rate? So the thing about the growth rate of the business is that you're never going to get paid for future growth. It doesn't happen. So, I could say that my growth is going to be 20x next year. You're just not going to get paid for it because it's one of those show me things. So really, when we're talking about the value of the business, what we're trying to do is make it more profitable. So get a bigger benefit to the owner, which is where cash flow and things like that come in. And then de-risking it. And de-risking it can mean a whole host of things. When we talk about the basis, that's a much different calculation. That is a tax-based calculation, and that's going to determine, hey, if here's a good example. If my basis in my business is $100, right, and if I take 120 out of it, what happens? Well, you're going to have a $20 capital gain. So you need to pay attention to basis to make sure that you're not taking distributions out of the business that are going to be taxable at the end of the year. Those are the surprises that happen. Like, oh, well, my basis was only 5K this year, but I ended up taking 70K out of the business because I had a loan and there was cash in the business and I just needed to go pay for my kids' private school and that sort of thing. Well, that's going to be a taxable gain. And then you're going to get a bill at the end of the year and it's going to be, well, what happened? That's what happened. So proactively asking these questions before you make huge financial decisions, that's a huge thing. I totally recommend that all of our clients do that. But as far as basis in the business and then value of the business, different things.
Sure. Well, I think that's so relative, because the entrepreneur out there they're just basically getting to a point where they're building their business, they're growing their business. It sounds like you start with some younger businesses, and even from our conversation before, you said that your average clientele, what was the age again?
25 to 45.
And so I'm sure there's a lot of innovative different, ideas out there that they're coming up with, and you're following through with it, because one of the jokes I always have here is we're not professional advertisers, but you're working in that creative space that is working with the professional advertiser. So it's a very different age right now. I mean, people are working from home. innovations happening from home. There used to be jokes about Bill Gates, coming up with the ideas in his garage. I mean, there's so many different things where we're kind of almost full circle and back to that. So, how would you suggest, like a up and coming business owner, how they would actually track their cost basis? Do you have any suggestions or any questions that they should be asking themselves?
Cost basis or tax basis?
I would say probably cost basis and tax basis. We have two different things, right?
Right.
But what they're taxable. I mean, obviously, if they're investing in their business and they take out more than what they invested in their business, then obviously we have a tax. But so many business owners, and they've even gotten to places where we've had several business owners that have sold their business in the past year or two, where they're looking at the capital gains of that business and they go, gosh, I didn't realize that I had so much of a capital gains and that the taxation was going to be so high. So again, like what you're saying, I think is not making it a surprise, but to have the right questions to ask. And I think the majority of business owners out there today don't know the right questions to ask.
Yep, I think that's spot on. So tax basis, first thing to know, and so here's one of the things we see a lot. If you've got K1s where you're a partner in a business, or you have some sort of investment partnership or something like that, make sure you're tracking your basis in those investments. So those are businesses that you own a part of, but maybe you're not necessarily operating inside of them, or you don't have any sort of operational control, or you're not involved in the day-to-day, those sorts of things. Make sure you're tracking your basis in those. The question to ask there is to ask your CPA whenever they're filing your tax return, and just ask them every single year when you get your tax return back. That's the question that you need to ask. From a perspective of a business that you own and that you operate, tax basis, make sure that you're asking a similar question, but make sure that you're asking your accountant or CPA who actually does the books and who's probably doing a tax return as well. Are you tracking this? What is my current basis? And then just know, like, what's the difference year over year? So that's one. Before you go and take distributions, ask your CPA, what is my basis right now? How much can I take out? Like, don't just do that willy-nilly just don't do it willy-nilly, please. That's terrible. Now, as far as the
a lot more work for you, I imagine.
Yeah, and it's always a surprise. Yeah, it is. And the work comes from having to break bad news that the business owner didn't expect. It doesn't necessarily come because we got to run all these like huge calculations, and it takes a ton of time. Like, if you're working with a business owner on a consistent basis, you can update these things fairly quickly. It comes from, well, how do we break this bad news to the client, which we never want to do. So that's part of it. As far as the value of the business, it's just tracking, it's paying attention to your financials. It's asking those questions. It's having somebody that you can have ongoing conversations with about the operations of the business. And a good question to ask every single year is, if I sold my business tomorrow, what would my capital gain look like? Because you have to plan for that.
Right.
If I sold my business tomorrow, what would the capital gain look like? If I sold my business tomorrow, what would I do with the money? So it's always good to have a financial advisor. It's always good to have a CPA. There should be an attorney too. They should all be in the same room, probably at least once a year. They should all know each other. They should all have their contact information. So if you go to your financial advisor and you tell them that you want to do something crazy, the financial advisor calls the CPA and says, hey, do you know about this? And vice versa, and those sorts of things. But those are the three questions I would ask, the accountant or the financial advisor on an ongoing basis. Set yourself a reminder, ask those questions.
Do you have a success story that you want to share?
Success story that I want to share. So COVID being what it was all of last year, every single one of our clients, with the exception of one, had a record year, which if you had asked me 14 months ago, what is, the next year going to look like, I would have said, holy cow, it's doom and gloom. Probably half our clients are going to be out of business. And that just wasn't the case. And the reason why is because we were proactive. We provided proactive advice to our clients. We sat down with every single client. It took 2 weeks. We had a conversation with every last one of them, and we gave our playbook. It was like, I think it was a 5-step playbook or something like that.
That's great.
But just giving that proactive advice and having the vast majority of our clients be so successful, I would say that's our success story at the moment, our best one anyway.
Well, I think that's kind of a comfort zone for many people, because no one had any idea of what last year was going to bring, even coming into this year. And it was such an unknown, this time last year, I think still for so many people. That's wonderful to hear that your clients became so much more successful through a pandemic year that we've never ever experienced in our lifetime. My goodness, what a wild ride it has been.
Yeah, exactly. In last March, we're in the middle of tax season. We basically put a pause to our tax season. And we said the U.S. economy, let alone the worldwide economy, has never been shut down for any period of time ever. Totally shut down. We don't know what to expect. So we think, and I don't, I don't know if you remember, but at the time it was like, oh well, this is going to last till May.
Oh yeah, it was just 32 weeks and then 30 days and then it's like 6 months.
Right. And so we said, all right, if it's going to last till May, let's plan to get through July. If we can get through July, we're going to be fine. So that's the planning that we undertook. It was 150 days, whatever that works out to.
I know. I think everyone is still, it's almost like a traumatic experience. A lot of people don't even, they've kind of distanced it from their mind and it was something they don't really want to totally remember. But some people, like you said, have had incredibly successful years from it too.
Yeah. And we're lucky to be, as well off as we are, I think.
Yes. Well, I asked you early on if there was something that you wanted to promote, and you said you have something of a digital book. So how can people, if they want to find you or get this digital book, how can they find it?
Sure. So betterwaycpa.com/data-driven agency. And the book is Scaling the Data-Driven Agency. And it's basically a step-by-step guide to taking the financial and the operating data that you have in your business, merging the two, and then using that to scale your business. So you're doing it in a data-driven way, not just in a way that's kind of pulling at straws all the time.
Well, I think that sounds like every business owner needs a copy of that. That sounds great.
It'll apply to any business owner.
Well, thank you so much for sharing your time and expertise and knowledge with us, because we could all use a little bit more help when it comes to our tax planning, especially our business owners out here. So if there's something creative that you want to find out through the work that is done here, please reach out to us. We'll make sure you get connected. And again, stay tuned. We'll be back with closing comments of the show. And again, it's been a wonderful joy to have you on the show today, Chris. And it's a pleasure to hear all of your suggestions and things that people in business should be looking out for.
Thanks, Elizabeth. I appreciate it. It was a good time.
Take care. As a thank you to all of our listeners, I would love to offer you a complimentary consultation with me, Elizabeth Dawson, and just click on the link below and you can schedule that time to meet with me. Take care. See you soon. Well, I think Chris gave a lot of insight into this whole story about how do we actually measure how we can create a cost basis of our business, a taxable basis of our business, how cash flow should come in and out if we're creating any kind of taxation. These are questions we should be asking ourselves, and I hope that you will get his digital book. I think it'll be a powerful piece. We're going to get our copy. That's for sure. And what I want to go here to is an audience question. The audience question here is, where can I minimize my taxes as a business owner? Well, I mean, Chris just kind of told you about quite a few things, but at the same time, I think there has a lot to be said about how we work with business owners, and mitigating taxes is the number one, driving force for a business owner to be able to keep as much of their profit, because we're working hard, we're building our business, we're building profitability, but then at the end of the day, if the government's going to take half of it, are there any kind of strategies that we can create to possibly put monies away that the government would normally take? It shouldn't just be based on building a business and selling it. It should be based on building a business and selling it, but also having some money put aside along the way. So we talk about something called a defined benefit pension plan. Majority of pension plans today don't really exist with big corporations anymore, but now for the small business owner, it's a great tax mitigation strategy where you can put a lot of the government's money away for you for a future date. And not only can you have the sale of your business when you sell it, but you can also have this bucket of money that can create retirement income. And along the way, you've been actually mitigating tax. So it's a win-win all the way around. If you want to hear more questions and answers about that, please give us a call at 619-640-2622. Would love to chat with you about it. Again, if taxes are on your mind, tax mitigation is all about the strategy of making it happen. So again, you can send your emails and questions to us at questions@elizabethwithans.dawson.com. Take care, and we'll see you at the next show. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy, or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.